Welcome back. We are looking at monetary policy. We are continuing with our journey on monetary policy, about monetary policy. We have seen a lot of things now about monetary policy. We have seen what is repo rate, what is reverse repo rate, what is liquidity adjustment facility, what is marginal standing facility, what is standing deposit facility, what is market stabilization scheme. We have also seen CRR, we have also seen SLR. They are a percentage of what? They are a percentage of net demand and time liabilities. Okay? What are net demand and time liabilities? Nothing but deposits of various kinds, of various types received by the banks. Yes or no? If let us revise something about CRR and SLR very quickly. What is the key difference between CRR and SLR? In CRR, only cash is kept, but in SLR, cash, gold and government securities are allowed. In CRR, cash is kept with RBI. In SLR, the securities lie with the bank itself. In CRR, they don't get any interest. The cash, RBI doesn't pay any interest to the commercial bank, but in SLR, they get interest on the government bonds which they have borrowed, right? SLR is mainly for liquidity purposes. SLR is a long-term thing because you are asking banks to invest. So banks will be invested in 5 years, 10 years. Na? Banks will buy government securities. So you are asking banks to invest. So that is the long-term intention. For short-term mismatches, what is the tool? CRR is the tool, right? CRR is under which act? CRR is under RBI Act 1934. SLR is under Banking Regulation Act 1949. Okay? Is there any floor or ceiling to CRR? No, there is no floor or ceiling to CRR. Is there any floor or ceiling to CRR? Yes, there is no floor but ceiling of 40% to CRR. All these are percentage of net demand and time liabilities. Why do we call it as net? Because we also deduct our deposits which we have kept with some other bank. R means we are commercial bank. Our deposits which we have kept with some other bank, we reduce that, and on the net amount you have to keep it as CRR. We saw RBI website, we saw all those rates also. What is FBIL? Financial Benchmarks India Limited. It is an independent organization which does the research, which does the studies, and they publish the rates for various purposes. One of them is bank loan rate. We saw the 4 regimes. Earlier it was discretionary regime, then came bank base rate regime, then MCLR regime, and then what came? External benchmark. So bear in mind that all these 3 regimes, apart from discretionary regimes, all these 3 regimes are still in practice. The only thing is, depending on the type of the loan, different things are. So remember, base rate was also published by RBI, and MCLR overnight rate was also published by RBI. So these are, but majority of the loans are now given under MCLR regime, and many loans are now also linked to external benchmarks. What are the 4 external benchmarks? Repo rate, 91-day T-bill, 182-day T-bill, or benchmark set by FBIL, Financial Benchmark India Limited. Okay, so far so good. Very good. What else did we see in the last lecture about monetary policy? We saw SDF, Standing Deposit Facility, which was brought in after demonetization. We also saw Market Stabilization Scheme, which was brought in after influx of dollars. We saw sterilization. What is sterilization? Sterilization is sucking out of excess liquidity from the economy in order to prevent the adverse effect of rising money flow, rising purchasing power, rising spending, rising fuel, rising prices, rising inflation. Okay? समझ में आ रहा है? Now we move on to the next. Very quickly we'll move on to the next thing. I told you that banks have to invest in government securities. Who is purchasing the bond and who is issuing the bond? Who is purchasing? Bank is purchasing the bond. Who is issuing the bond? Government is issuing the bond. Okay? So now we spoke in 1997, we discontinued something. We discontinued ad hoc subscription of treasury bills by RBI was discontinued, and in 2006 printing of currency was discontinued. Now we go to how do central government and state government raises funds. Okay, I told you in fiscal policy chapter that some part of debt will be covered in monetary policy. We discussed a lot about debt and fiscal policy. Some part would be covered in monetary policy. So this is the part I wanted to cover in monetary policy. Chalo, what are the 2 levels of government? There is central government, okay. There is state government, okay. There is 3rd tier of government also. Remember, Panchayati Raj, municipal corporations, all of them are 3rd tier of government. They all need money. Okay? But I had also told you that the 3rd tier of government or the municipal government is not yet financially empowered to raise funds. So let us skip that discussion for now, because that is more related to polity. Okay? So where do you think these governments will go to borrow? Suppose they have just published their fiscal policy, they have just published their budget. Very good. They are running deficit, of course. Why do we run deficits? Because we want to finance our economic development by borrowing. Because we have more need of more money for expenditure compared to our receipts, right? See, why do we stress on education and all? Because when you are educated, your social goals are achieved, but you also earn more, you as a person. When you earn more, you pay more tax. So that also helps in government's agenda of economic transformation. Everything is interrelated, social, societal, and economic and political, everything is interrelated, right? Okay. Where do you think central government will go to borrow? Where do you think central government will go to borrow? Central government has a fiscal deficit of 4%. How to fill that 4%? We have discussed this. What is the option? Borrowing. From whom it will borrow first? No, it will go to banks first. It will go to commercial banks first. Okay, it will go to commercial banks. Remember crowding out wala discussion. Okay, so I would say, so I can say it will go to banks. Okay, did I tell you in that lecture that even individuals borrow, even individuals lend money to government? Yes or no? So I am writing a broad term now. I am writing it as market. Market has both banks and individuals. So let's say tomorrow if governments, we saw on the RBI website GS 2030, government security 2030, yes or no? So today if you want to buy a government security, today if you want to invest in a government security, you can do that. Which means what? Government is borrowing from you, government is fulfilling its fiscal deficit obligations by giving you a bond. Okay? So this will include individuals also, banks also, yes or no? See, crowding out we are not looking at here. Why? Because that was a part of fiscal policy. The point I am trying to make will come now. So do you agree with this that central government can go to market, state government can go to market? Yes or no? Okay. Now what happens if crowding out happens? Where do you think central government will go? Iska borrowing full ho gaya hai. Either it can go outside India, or what happens if central government needs emergency funds but market mein crowding out hai? It will go to lender of last resort. Who is lender of last resort? RBI is the lender of last resort. Very good. So now RBI. ठीक है. So either central government first goes here, then kuch bach gaya, something remaining, then it will go here. Not necessarily RBI will say yes. Remember that was discontinued. But it can ask RBI whether you are able to give or whether you will give or no. Same goes for state government. See, RBI is a banker of state government also. Always remember this. Okay? So state government can also go to market and borrow. Now, did you see in the RBI website, did you notice that there was rate given for 91-day T-bill? Was rate given? Did you notice that there was a rate given for GS 2030 also? Government Security 2030. So from 91 days till 10 years, so many government securities are issued of varying maturities. So can I say some are long term and some are short term? Short term in market parlance, see, the definition of short and long changes. I told you in tax chapter also, some things long term is 3 years ke above, but below 3 years it is short term. So similarly here also, in this context, the short term is 1 year, less than 1 year. More than 1 year it becomes long term. Okay? So now, very important. Can I say central government can issue both short term and long term securities in the market? Is it clear? So I am saying central government can issue short term securities in the market. Central government can issue long term securities in the market. Okay? Now our financial laws are structured in such a manner that state governments are not allowed to issue short term securities, because state governments are comparatively unstable compared to central government. Okay? State government, state politics and so many things happen, right? So state governments are not allowed to issue long-term funds, long-term instruments, long-term bonds, long-term securities. What are GSECs? What are government securities? All these things are government securities. Whatever is issued by central or state government are government securities. State governments are not allowed to issue short-term securities. Hence, state governments can only issue long-term securities. Okay? LT is long-term, ST is short-term. After this, they will go to RBI. So let us first complete their transaction in markets. Okay? This is our scenario. When central government issues short-term securities, what do you think they are called? We had discussed this. Remember 91 day, 182 day, what are they called? They are called as T-bills. Remember T-bills? Remember, they are called as T-bills. They are known as Treasury bills. Do you agree with this? T-bills. What kind of T-bills? 91, 182, 364. What is their eligibility for issuing of T-bills? Please meet me in the markets chapter. We will discuss this in markets chapter. Okay? For now, T-bills. What do you think central government's long-term securities are known as? Simple, straightforward, government bonds. So when we speak about bonds, we speak long term. When we speak about T-bills, we speak short term. Short term means what? Less than 1 year. Remember 91, 182, 364 days. One day shorter than 1 year. Yes or no? 364. Did you notice 91 ka double is 182, 182 ka double is 364. All these T-bills. We'll see this in the market chapter. Okay? Now I told you that they can only issue long term. So when state governments issue long term securities, what do you think they are called as? They are not called as government bonds. They are in the nature of government bonds, but they have a special name. They are called as, see, look at the English. State for the purpose of development, deficit हुआ है, it is borrowing, so it is taking a loan. State development loans, SDLs. So when you read Maharashtra government, Rajasthan government is issuing an SDL worth rupees 10,000 crores, it means nothing but it is borrowing 10,000 crores from the people. It can be commercial banks or it can be individuals like us. It can be big organizations like LIC and other investors also. It can be private organizations also, Reliance, Tata, Wipro, etc. So if I tell you, you are borrowing 100 rupees worth of government bonds. So is government giving you 100 rupees or you are giving government 100 rupees? We are giving government 100 rupees. Are you giving it for long term or short term? Long term, because I am talking about government bonds. Similar goes for state development loans. This is by state government. So far so good, very good. Now this has a limit. Do you know what is the limit? Crowding out. After a point of time you cannot borrow from here. So whom will you go for last resort? RBI. You tell ki RBI, do you have some money? RBI says ki I have some money for you. Very good. RBI says I have some funds for you. Emergency funds ke liye I am the lender of last resort. I have some funds for you. You have come to me. I am very happy. Okay? The funds which are given by RBI, are called as ways and means advances. They are called as ways and means advances. So when we speak about ways and means advances, we are speaking about nothing but funding by RBI, which is given to governments to fulfill their deficits or to fulfill their borrowing requirements. It is not free. It carries interest. Okay? It is not free. Free things are over now. So ways and mean advances can be divided into two types. Okay? One are known as primary, one are known as secondary. Okay? Primary ways and mean advances and secondary ways and. So this is known as normal. This is called as special. Right now, interesting things are coming up. Normal के लिए, so these are limits. So up to a certain limit you can go under normal window. उसके ऊपर चाहिए, if you need more than that, you have to go to special window. This is a special requirement. समझा आपको? If you need up to 5,000 crores, you can go here. If you need more than that, you can go here. These are windows with RBI. RBI is all about windows. Yes or no? So normal में, now where do you think would more security be required? Here or here? More security would be required in normal or special? Special. Okay? So more security is required in special. In normal, there is no security required. No security. It is a fixed amount which you can borrow with state government, central government. Obviously, this happens at interest. It is not free. It is borrowing only. Okay? So normal mein no security. And special mein security is required. See, no security is required. Okay? No security, everything is clean. Without security, you can take the money. Hence, it is also called as clean window or clean borrowing. Okay? So when we speak about or this no security, there is a word for it. It is called as unsecured. So if you take a loan from the bank and if you don't give bank any security, which means that bank has given you an unsecured loan. It is not secured by any backing. It is unsecured. Okay? What do you think is more risky, secured or unsecured? To the bank, unsecured is more risky because tomorrow if you run away, what will bank do? Nothing. Okay? So normal window, because this is routine in nature, thoda bahut routine hai, so that is why no security. It is clean, it is unsecured, and special window is over and above normal window. Okay? Now, interesting thing. Who do you think is eligible for normal window? Who do you think is eligible? State government or central government or both? Normal window के लिए eligibility is central government plus state government. समझा? So state government can also borrow through WMA when state government does not have enough money left in the banking supply or banking circle to borrow through SDL. It will go to RBI and it will ask RBI, give me loan under WMA. These are short term in nature. WMA, it can access normal window. Central government can also access normal window. Now what do you think about special? किसको मिलेगा special? क्या लगता है? Who can access, state government or central government or both? So special window is only accessible by state government. Central government does not have the facility to access special window of WMA. वो उसका जितना है उतना ही enough. Now why this? This is because we are already constraining the limit of state governments to borrow from short term. So RBI is saying कि ठीक है, in case if you need it, you can keep your security here. I will give you a secured loan. ले लो. And since they are short term in nature and इसको short term नहीं मिला है, that is why a special window is created only for states, but normal window is applicable for both center and states. Do you agree with this? Please copy this down as it is. Always remember they are short term, and when we speak about short term borrowing, what do you think would be the interest rate? क्या लगता है? Which interest rate? Which is the famous interest rate where RBI gives money to banks? Everything happens at repo rate. Yes or no? Please make this, take time, it's okay, but make this very important. ठीक है. Who is the agent of government? RBI. RBI is the agent of government. Who borrows money to finance fiscal deficit? Government. Government borrows money. ठीक है. Who do you think helps government borrow money from the market? RBI. RBI also helps. RBI acts as the debt manager of the government. Always remember, RBI acts as the debt manager of the government. DEBT, debt manager of the government. ठीक है. Now, most important part, debt can be internal or external. Yes or no? RBI can borrow debt internally. Sorry, government can borrow debt internally. Government can do that externally. So internal debt is internal debt is managed. Government's internal debt is managed by RBI. Sir, what about external debt? Government's external debt is managed by Ministry of Finance. ठीक है. Finance Ministry. Right? Now I am going to tell you one or two dilemmas which happen when RBI acts as a debt manager of the government. See what happens. All the issue of securities, everything is done by RBI on behalf of government. So all the pricing and all is also done by RBI. So as a debt manager of RBI, what do you think RBI will try for? As a debt manager of RBI, what do you think will RBI try for? A higher rate of securities or a lower rate of interest on securities? As a debt manager of the government, what do you think RBI will try for? Highest possible rate of interest on securities or lowest possible rate of low, because government has to give interest on that. So RBI will try to keep rates as low as possible. But as the Monetary Policy Authority of India, what do you think RBI will do? If there is inflation, then what will happen? RBI will increase interest rate or reduce interest rate? RBI will increase interest rate. So this is a dilemma which RBI faces. Suppose in terms of inflation, government has to borrow funds. RBI has to keep interest rates high because inflation हो रहा है. But at the same time, as an agent of the government, RBI has to keep interest rate low because government is going to pay that interest to people. Yes or no? Because as an agent, our government will ask RBI to keep interest rates as low as possible. So this is a very big dilemma. Do you agree with this? Second dilemma is that I told you that there are 21 odd banks in the country. Okay, 21 odd banks in the country, and how many of them are public sector banks? Many are public sector banks. SBI, Central Bank of India, so many Dena Bank, so many are BOB, Bank of Baroda, so many are public sector banks. Public sector means what? More than 50% is owned by the government. Okay, very easy to understand. Who invests in government securities? Commercial banks. SLR, remember SLR. Who issues government securities? Government. Commercial banks, especially public sector banks, are under whose control? Government. So government is only issuing securities and government's kids are only purchasing securities. Yes or no? In SLR. So what would government do? Government would tell its kids to buy more securities or less securities. Government would try to persuade its children to buy more securities or less securities. Buy more and more securities because it is the source of funding for the government. Yes or no? RBI as an agent of government will persuade banks to keep more as SLR. But let's say today economy is in a recessionary phase. Then what will happen? You have to reduce SLR. But funding requirements of governments are also there. You have to increase SLR for that. This is a dilemma that RBI is put in because of government. There was a committee under Jahangir Aziz. Very old committee. There was a committee under Jahangir Aziz. They said, don't make RBI the debt manager of government. RBI is the monetary policy authority. Let it focus on monetary policy authority. Why are you making it the debt manager of government? Samjha? They gave recommendations for an independent public debt. See, external का टेंशन नहीं है, इंटरनल की बात चल रही है. Public Debt Management Agency, PDMA. Now see the dilemma here. They said कि remove RBI as the internal debt manager and this should be an independent agency. Remove government finance ministry as external debt manager and let it go to an independent agency. Did we see recommendations for an independent fiscal council? Did we see recommendations of NK Singh Review Committee for an independent fiscal council? Similarly, here also they are saying keep an independent public debt management agency. Don't let them play with each other so that their roles are conflicted. समझ में आ रहा है? Are you understanding this? Fairly simple. ठीक है? Public Debt Management Agency. First committee. Second committee which spoke about Public Debt Management Agency. These three committees you should know. These three committees you should know. Second committee which spoke about Public Debt Management Agency is Dr. Raghuram Rajan Committee, which also spoke about a Public Debt Management Agency. Third committee which spoke about Public Debt Management Agency, which said that there should be an independent Public Debt Management Agency, was committee headed by B.N. Sri Krishna Committee. ठीक है? One thing which you should know about committees, one very important thing which you should know about committees is that one person can head various committees. So when you see Dr. B.N. Sri Krishna Committee here, we are talking about banking context. B.N. Sri Krishna has headed more than 10 committees. One committee was headed on data privacy law. One committee was headed on something other than not related to economics also. So don't be confused. Here we are talking about this committee which was tasked with talking about Public Debt Management Agency. Similarly, Dr. Raghuram Rajan has also headed 2-3 committees. He was the chairperson of 2-3 different committees. Okay. This was somewhere around 2011. This was somewhere around 2009. This committee, उसका नाम important है. It is called as, see this, financial. It was a big mandate. It was a big mandate. Financial sector don't write now. I'll give you time to write. Financial Sector Legislative Reforms Committee, B.N. Sri Krishna, recommended creation of an independent Public Debt Management Agency. Dr. Raghuram Rajan Committee recommended Public Debt Management Agency. Jahangir Aziz recommended Public Debt Management Agency. ठीक है? Very good. But what are the other sides? What do you think are the disadvantages of Public Debt Management Agency? What do you think can go wrong when we establish Public Debt Management Agency? RBI said, sir, we are experts. If they go, see, we have a dilemma to keep interest rate high as monetary policy authority, to keep interest rate low as the agent of the government. Yes or no? So we know how to strike a balance, but they will set it very low and we will set it very high. So we cannot convince them, they will not be able to convince us. So और बढ़ेगा, more friction will happen in the economy. Since dilemma is with us only, we know how to balance things and we will take a uniform decision. But if you have a separate debt management agency, then you will have very low interest rates for buying government bonds, but very high interest rates for controlling inflation. People will be confused and net effect on economy might not be as strong as we desire. This will go in opposite direction impact. So you will be following expansionary policy in terms of debt, but contractionary policy in terms of monetary policy. So this will be a part of fiscal policy then, of course, because it will be a government this thing. So that is why they said ki, sir, don't separate our functions and don't give it to this agency. Okay? So a lot of talks are going on. Abhi tak kuch nahi hua. There is nothing which has happened. The only thing which has happened is within RBI they have created a separate public debt agency. Within RBI they have created a separate public debt cell. एक छोटा department they have made who will control public debt within RBI. ठीक है? So PDMA is not in existence, it has been recommended. There are pros and cons of both setting up PDMA and not setting up PDMA. Always remember this is independent from RBI and Finance Ministry. Always remember it will have the job of both internal and external debt. So यहाँ से भी function will go here and external debt function will also go to PDMA. So one pro of or one benefit of setting up PDMA is that it will manage both internal and external debt of the economy. So now it is in two separate hands. So there is a lot of tussle between these two also. So when it goes to PDMA, of course it will have representatives from RBI, it will have representatives from Finance Ministry. और कौन आएगा? ठीक है? So PDMA will also manage internal and external debt simultaneously. So this friction will be avoided, and they know government's requirement better and etc. The opposite thing is that they have been doing it since many years and they know a lot of intricacies and dilemmas, and then they try to balance it. So these might not, it might not be easy to balance the friction between these two people. Samjha? So these are the pros and cons of Public Debt Management Agency or setting up of Public Debt Management Agency. Simple, very easy. So RBI is a debt manager of the government. RBI is an agent of the government. Is also not fraught or is not that easy, and the picture is not rosy, right? One important disadvantage I am going to tell you. What did I tell you? Government owns a lot of public sector banks in India. Government will want public sector banks to invest in government securities or in other securities. Government will want them to invest in government securities. Okay? I told you earlier that there are government bonds if they are issued by government. If they are issued by some private people, then what are they called as? They are called as corporate bonds. Remember, if Reliance also issues such a bond, see the bonds which we saw, treasury bills and government securities, they are issued by government, but similar instruments can also be issued by private companies. Tomorrow Tata Group can also issue such a bond. Remember, masala bonds and all, they are issued by privates and public also. NTPC has issued green bond, privates, HDFC has also issued green bond. So public and private, anyone can issue these securities. So in our example, if Tata Group issues a bond, who is the borrower? Tata Group is the borrower. We are the lenders. So if you buy a Tata Group bond, you are lending money to Tata Group. Tata Group is giving you the bond and it will repay. Okay? Very good. Now you tell me, if more and more commercial banks are forced to borrow government securities or to invest in government securities, don't you think that it is an indirect discouragement to invest in other corporate securities? See, banks have an option. I can buy Tata Group bond, I can buy government bond. But since government is forcing me to buy government group bond or government bond, I am unable to invest or I am unable to buy Tata ka bond. Yes or no? What will happen due to this? Government gets money, but Tata does not get money. What will happen? G will increase, but I will not increase. Yes or no? So this forceful purchasing of government securities, of SLR securities by government, by commercial banks due to instructions of government leads to underdeveloped corporate bond market. Do you agree with this? Underdeveloped means kya? Means there are not many players in the corporate bond market. See, if SBI is unable to purchase Tata securities, it has not entered in the market. So if there are already ICICI and HDFC has purchased corporate bond securities, but SBI has not purchased. So Tata and HDFC cannot sell its corporate bonds to SBI because government securities ही खरीदना पड़ रहा है. If tomorrow government does not force them to buy government bonds, then people will choose freely, banks will choose freely, go to corporate or go to government. Then if more and more banks buy corporate bonds, then corporate bonds will acquire more liquidity. Yes or no? Because there are another players, you can sell your bond beforehand to another player. If you do not find any buyer, then there is no liquid. So if tomorrow 50 banks, let's say suppose 50 banks buy Tata government securities or buy Reliance securities, they can play within themselves, they can exchange securities, they can sell and buy securities within themselves. But now what is happening, due to government high-handedness, SLR requirements are forced upon public sector banks. So they borrow government bonds and they are unable to borrow corporate bonds. Hence corporate bond market is not liquid. If corporate bond market is not liquid, other banks or other players are also discouraged from buying corporate bonds because they will not find any ready-made buyer for their bonds. If corporate bond market is not established, money does not flow to corporates, yes or no? And when money does not flow to corporates, then what will happen? They are not able to expand, they are not able to invest, they are not able to consume, and ultimately it affects GDP. And government, there is no guarantee that government will use that money efficiently also. Samjha? This was all about RBI's role as a debt manager, or RBI's confusing role or diverging role about debt manager, and also the dilemma associated with government bonds. ठीक है? Got it? So I'll give you time to write this if you want. In the end, I'm anyways going to give you time, but if you feel like writing it now, just write this. Who headed Financial Sector's Legislative Reforms Committee? B.N. Sri Krishna. Okay, Dr. Raghuram Rajan committee was in 2009 and this was in 2013. One important recommendation of FSLRC I'm going to tell you now, which we have started doing it since last year's budget. One very important recommendation was codification of financial laws. Sir, what do you mean by codification of financial laws? Codification means, I had told you this, when we move on from income tax to direct taxes code, we are making one code and we are having separate sections under it. Yes or no? I had told this. So, B.N. Sri Krishna committee also gave one recommendation that there are so many financial laws in India. Securities market ke alag laws, income tax different laws, GST different laws, so many laws in India. So establish one code in that all the financial laws will be there. One code, one system, and that will be called as, see this, Indian Financial Code, IFC. So they gave one very important recommendation to implement IFC, which means to consolidate the laws. If there are duplicate laws, there are multiple laws for one thing only, just repeal whatever is redundant and then club them into one law, so that there is only one piece of legislation, one big code. No doubt it will be very big, it will be very bulky, but there will be only one code. Because some act says something and then other act says something very different about the same thing. There are situations here also where XYZ act will say that you should do this, but other act will say that you should not do this. So there are so many laws in India that we are also confused. So they said ki set up look for ways to consolidate the laws and bring in a Indian financial code. Sir, what is the status currently? The current status is that we have started the process. Dhire, slowly we have started the process. Last year's budget, like current year's budget, the last budget, what was announced was that 4 securities market related laws. You don't need to remember all this, but just see the context. Indian Depositories Act plus your Government Securities Act plus Securities Contracts Regulation Act and your SEBI Act. These all will be merged into one Securities Markets Code. Samjha? Securities Markets Code. So one code will have various laws. And then similarly different codes will be brought in, and then all these codes will be merged in one code called as Indian Financial Code. So it will take more 10 years, there is no doubt about it. So by the time you will be working in Finance Ministry or Economic Affairs or Corporate Affairs Ministry, you might be working on Indian Financial Code. ठीक है? Easy? What is sterilization? Foreign liquidity we have to suck out from the economy, and is it free? No. So when you read in paper, sterilization costs are very high, which means they are talking about the interest which is to be paid by the government or RBI on behalf of government uh, for on those bonds which are used to sterilize the money or sterilize the income which has come. Understood? Chal. Let us move ahead. Did you notice that these things, did you notice that till now we have discussed only rates? Repo rate, reverse repo rate, all these are quantitative tools. Do you agree? CRR, SLR, these are all numbers. Okay. So I told you that RBI wants to reduce money supply, what will happen? RBI wants to increase supply, what money supply, what will happen? RBI wants to keep extra money as reserves, what can be done? Increase rate, decrease rate. We have talked about only um, we have only talked about the monetary or the rates aspect of it. There is one more tool which does not correspond to rates but which can help in which can help in which can help in our goal of achieving the monetary policy, this thing, expansionary or contractionary, which can help in our goal of achieving the objectives of monetary policy. Okay? So now answer me, simple answer hai. I told you RBI is an agent of the government. RBI can also act as a customer of the government. So RBI can also buy treasury bills, yes or no. RBI can also buy government bonds, yes or no. In fact, RBI does. RBI purchases a lot of treasury bills for its own work. RBI purchases a lot of government bonds on its own, not as an agent. Okay? Because as an agent it is selling, as a customer it is purchasing. An agent can be a customer. Okay? Now tell me one thing. If RBI comes to you and RBI buys government securities from you, you have purchased government securities when government had issued it 2 years back. Let's say 10 years ka security you have purchased. After 2 years, RBI came to you not as an agent but as RBI on its own motion. It comes to you and it asks you, ki, will you sell your government security to me? I will buy government security from you. What do you think will happen to the money supply in the economy? You are selling government security which you had purchased earlier to RBI. RBI is purchasing government security from you. What do you think is happening to money supply in the economy? Think and tell. It's a good question. RBI is purchasing government securities from the open market. You are open market. RBI is purchasing government securities from the open market. What do you think will happen to money supply in the economy? It will increase because when RBI purchases it from you, RBI is giving you money. Yes or no? So one more tool we saw apart from the rates of increasing or decreasing money supply in the economy is purchase of government securities by RBI on its own in the open market. Yes or no? What will happen if RBI sells you government securities? When RBI sells you government securities in the open market, okay, RBI had earlier taken from the government, now it is selling it to you not as an agent but as it's on its own. Then you will purchase the securities. When you purchase the securities, you pay to the to RBI. When you pay to the RBI, RBI is now directly sucking money out of the economy. Yes or no? Simple. Do these sale and purchase operations happen in a closed market or open market? It happens in an open market. It is open market. I told you in the previous lecture that there is that RBI does not deal with common public. Yes or no? RBI deals with banks and all. This is the only exception where RBI deals with common public. And here RBI directly buys securities from you or sells securities to you, and this tool is known as, see the English, again see the English, open do you understand this? Open market operations. What is open market operations? Buying and selling of government securities by RBI from the open market. Next level, open market operations. So when RBI buys, what do you think? When RBI buys and RBI sells, what will happen to the money supply? When RBI buys securities, what will happen to the money supply? When RBI buys securities, money supply would increase, yes or no? So can I say RBI purchasing securities or RBI buying open market securities lead to a cheap money policy? Is this true? When RBI sells you securities, when RBI is selling you securities, RBI is taking money away from you. When RBI is taking money away from you, it is following a dear money policy. When RBI is buying securities from you, it is paying you. You can use that money for your consumption. It is a cheap money policy. Open market operations. Okay? Now very important question and very interesting thing to ponder upon. Is government issuing new securities here or is government redeeming any securities here? Government is not issuing new securities. See, government has issued securities already. Then you are playing within yourself. Government ने छोड़ दिया securities in the market. Then RBI is buying, then RBI is selling, then RBI is buying, then you are buying, you are selling. Okay? So your government securities, this is not a new issue. This is a playing of the existing securities only. So one very important thing which you need to know here is that in open market operations, the quantity of securities in the market does not change. See, RBI is also a player in the market. The quantity of securities does not change because you are buying from RBI, RBI has given it to you, but RBI is not selling a new security. It is holding an existing security which it has purchased from government. As a customer, it is selling it to you. See, this is resale. This is second hand. Okay? This is second hand dealing. It is called second hand dealing. Okay? Quantity of securities does not change. But what changes? What changes? Yes or no? Ownership changes because when RBI sells, you become the owner. When RBI buys, RBI becomes the owner. So quantity ke jagah, I would use a little bit polished term. The stock of securities does not change. Stock means stock, normal stock. Stock hai. So the stock of securities does not change, but only the ownership changes. So this question or this statement might come in prelims. In under open market operations, quantity increases or quantity decreases. No, it does not. It only changes hands. It only ownership changes. Samjha? This was all about open market operations. Very simple. RBI going to the open market and asking. Now in the open market, who are the players? In the open market, players are various. In the open market, commercial banks are the players. Institutions like LIC, foreign banks are the players. You individually, you are also a player. So right from smallest of the smallest to the largest of the largest, all are players in your open market operations. ठीक है? Simple enough. Open market operations, cheap money, dear money, quantity of securities does not change, ownership changes, stock and all, everything. I hope you understood this. This was all about open market operations. So open market operations also acts as a tool for changing quantity of money supply in the economy. Not only the rates, repo rate, reverse repo rate, other CRR, SLR, open market operations are also one of the good tools. Now still, I am talking about quantity only. You are changing the quantity of money supply in the economy. Yes or no? You are reducing money supply, you are increasing supply. Okay? So let's say if this is the total money supply, this is the total money supply. Either you are reducing it or you are increasing it. Barabar? But how? So you are taking either a small pizza or a big pizza. But how to divide that pizza? Now that is the question. Which means who should get more money and who should get less money? For example, farmers should get more money. Yes or no? People who are polluting or people who are purchasing sin goods, they should get less money. Or people who are already making a lot of profit, they should get less money. Yes or no? So can I say that we have to ration this now? The entire money supply we have to divide it. ठीक है? So abhi tak whatever we saw regarding the changes of rates, regarding open market operations, can I say they only change the size of money supply but not the direction of it? Kahan ja raha hai that we don't know. Less is going, more is going, that we know, but where it is going we didn't know. So till now we saw English quantitative tools of, now help me with this, quantitative tools of credit dash. Credit control or credit creation? Credit control, because who creates credit? Commercial banks. Who controls credit? RBI. So these were all tools, SLR, CRR, everything was all tools of credit control. Remember this thing, do not forget this thing, that RBI controls credit, not creates credit. Credit is created by commercial bank. How? We will see in the banking chapter. ठीक है? So far very good. Okay. Now we are going to see qualitative tools of credit control. Qualitative means who gets which quality of funds, more funds, less funds, to which kind of customer. So more funds go to which quality of industry. So let's say if you want to boost steel industry, so you will provide, as an RBI, you will provide more funds to steel industry. You means you will not directly provide, you will ask banks to provide, कि उसको दो ज़्यादा, right? So how will you do that? Let us see what are the qualitative tools of credit control now. Qualitative tools of credit control. Simple hai, but I'll tell you how it is, how it works. Now you are rationing the pie, ठीक है? One of the tool is, pay attention, I'll give you time to write. Fixing margin requirement. Now what do we mean by this? Fixing margin requirement. Chalo, you are an RBI person, you are RBI, you have to encourage more credit to farmers and less credit to, let's say, computer manufacturers. Suppose, what will you do? You will make laws that banks have to follow, that when a farmer comes to ask for 100 rupees loan, take security from him worth 40 rupees. When a mobile or computer manufacturer asks for 100 rupees loans, take security from him 70 rupees. Samjha? How are we discouraging credit to one industry and how are we encouraging credit to other industry? So for all industries, if the margin requirement, that is what is called margin. So if you give 100 rupees worth of security, let's say 100 rupees worth of gold if you give, you will get loan against it only 80 rupees or 90 rupees, because 10%, so they keep some buffer. Okay? So if farmer is giving 100 rupees worth of jewelry, then he will get loan worth 90 rupees. If a steel manufacturer gives 100 rupees worth of jewelry, he will get loan only for 50 rupees. Did you understand? How are we changing the direction of credit now? Because farmers then find it easy to access funds. Steel manufacturers, in our example, if you want to discourage them, find it difficult to access funds. Funds utna hi hai. We are not increasing, decreasing funds, but we are diverting more of those funds to farming now. Yes or no? Samjha? Very simple. Second most important thing is something called as English priority sector lending. Now what do we mean by this? We say, hey commercial banks, every bank, whatever amount you have for giving out as loan, whatever is your size of loanable funds. So let's say 100 mein se 4 CRR, 2 went for SLR, what is the size remaining? 94. Out of that, whatever loanable funds you have, some percentage mandatorily you have to give to farmers. समझ में आ रहा है? After giving to farmers mandatorily, then remaining you can give it to anyone. Samjha? How are we diverting funds to farming now? Those sectors are called as priority sectors. There are 8 such sectors identified. Government and RBI have identified 8 such sectors. What do you think will be the sectors? What are the priority sectors for our economy? Chalo, try to take a guess. Agriculture is one. Second क्या होगा? What do you think is the priority where funds should be gone? Which industry do you think? Any renewable energy, because we are pushing renewable now, so they need funds. Renewable energy, yes or no? What else can you think of? Anything that you can think of? Education, health, yes, all these are there here. Health, education. So all social sectors come here. These are 8 sectors. The total of them, you won't imagine, amounts to 40% of loanable funds. Samjha? So if after CRR, SLR, everything, you have 100 rupees to give as loans, 40% you have to give to priority sector, only 60% you can give to other sectors. Did you understand this 40% wala? Okay? And now 40% of what? 40% of what? So let's say bank is getting 100 rupees as 105 rupees as deposits. 5 rupees goes in SLR CRR. It has 100 rupees remaining to give out as loans. Government says कि उसमें का 40% you have to give to priority sectors and rest 60% you want to give it to anyone you can. But 40% of what are we talking about here? 100 rupees. What are that 100 rupees which are remaining after CRR SLR? Yes or no? We are not talking about 105 here, we are talking about 100 here. So 100 rupees aaya deposits, 105 aaya deposits, 5 went for CRR SLR, then you have 100 rupees as loanable fund. So iska 40% will go to PSL and 60% will go to others. Samjha ye? So this 100, what is it? It is remaining after CRR SLR, yes or no? Can I say they are the loanable funds of the bank? Can I say they are the loanable funds of the bank? So these are loanable funds, yes or no? Again, loanable funds is a very desi way of saying it. There is a special term for that, and that term is called as ANBC. Sir, क्या बोल रहे हो sir? ANBC. It is nothing but loanable funds, but the hi-fi term for that is average net bank credit. Average of whatever loanable funds you are having, uska net bank credit should go, or bank credit should go to your priority sector. Why net? Because we are reducing CRR, SLR requirements and then we are arriving at loanable funds. So net bank credit should go to your priority sector. So currently it differs for foreign banks and Indian banks. So Indian banks have to keep 40% of their average net bank credit to these loans they have to give, and then they can give it to someone else also. ये समझा क्या? Is this understood? 40% of what? Average net bank credit. What is average net bank credit? The amount remaining after CRR, SLR, reserve requirements, everything. You keep aside some funds for your own use. Average whatever you have for lending it out, for net funds which you have for lending it out after deducting all your reserve requirements and all your requirements, personal requirements of the bank. Uska 40% should go in priority sectors and rest all they can go in other sectors. Are we not diverting funds to priority sector? Yes. This is qualitative method of credit control, not quantitative, qualitative. Okay? I will write 2-3 more things here. I want to write 2-3 more things, but they are so easy that this word is very important. Moral suasion. SUASION. Moral suasion. MORAL. Moral SUASION. This is also one of the qualitative way of credit control. Sir, what do you mean by moral suasion? I have one Hindi word for this. Dhamki. Give farmers more credit, otherwise I will levy penalty on you. I am RBI, I can do anything. Moral suasion. Very easy. Iske baad there is one more thing. After giving dhamki also he doesn't pay attention to you or he doesn't listen to you. What would you do as RBI? You would take action. Yes or no? You would penalize it. So one more thing, point 4 comes, which is direct action. No need to write all this. Direct action. So RBI also takes direct action. So these are all qualitative methods of credit control. You are diverting funds to wherever you want and you are making scarce making available scarce funds to wherever you don't want funds to go. Okay, so margin requirement is one of them. Priority sector is the biggest of the tools which we have. Moral suasion is dhamki, it is always there. Warning, dhamki, threatening actually, not warning, threatening. Moral suasion is nothing but threats. Is this clearly understood? Okay, we'll write at the end quantitative tools and qualitative tools of credit control. What is priority sector lending? Some sectors we have identified which need funds on a priority basis. See, tomorrow if some new technology comes, that will also come under PSL, depending on the need. Tomorrow if we achieve very high efficiency or high sufficiency in renewable energy, that funds are not required, renewable energy would be removed from priority sector. Some new sector would come. Now COVID came, health and education were already there in PSL, but let's say now manufacturing of medical devices would also be added here. So this keeps on changing. Okay, depending on the need of the economy, depending on the situation in the economy, this is very dynamic. This keeps on changing. Is it clear? Very clear. Okay. This was all about qualitative tools of credit control and quantitative tools of credit control. Samjha itna? Next we move on to the most important part of monetary policy chapter. Very, very, very important part of monetary policy chapter. See, what is the aim of monetary policy? Tell me one thing. What is the aim of monetary policy? To ensure adequate money supply, to ensure adequate levels of money supply. What would happen if there is more money supply in the economy? There is inflation. So, earlier, RBI did not know whether to target inflation or whether to target growth rate. Because see, government is always targeting growth rate. Yes or no, government wants to grow at 5%, government wants to grow at 8%. उस हिसाब से it will decide fiscal deficit, उस हिसाब से it will decide the borrowing requirements. NK Singh Review Committee has said to manage debt, to target debt, yes or no? So what should RBI target? What do you think? See, RBI controls interest rate, but what should it target? There were a lot of discussions about this. Ki RBI should target this, RBI should target that. Then finally a consensus was made that RBI should target the inflation rate. See, interest rate you are increasing or decreasing, but as per what requirement? What is the anchor based on which you will increase or decrease? आप क्या देखोगे? What will you see? Money supply or growth rate or fiscal deficit or debt? What will you see exactly? कि उसके basis पे you will think that oh I have to increase interest rate or I have to decrease interest rate. What is the policy? What is the basis for your policy action? ठीक है? Are you getting it? What is the basis for your policy action? So it was decided that RBI should target, and this was decided in 2016. Bear in mind, RBI should target only one indicator, and that is what? Baki RBI will not see anything. I mean, it will take into consideration all those factors, but its actions would be based on inflation. Okay? So if inflation is high, what will RBI do? Will it reduce interest rate or increase interest rates? If inflation is high, what will it do? It will increase interest rate so that less money supply is available. So this gave an anchor to RBI's policy. कि ठीक है, I am looking at inflation, उस हिसाब से according to that I will adjust my interest rate. ठीक है? This is called as inflation targeting. I hope English is simple enough. Inflation targeting, you target inflation. अभी target inflation मतलब क्या? What do you mean by target inflation? Did we have a target fiscal deficit as per FRBM? 3%. Do we have a target debt as per NK Singh Committee? 60%. RBI was given the task to determine the target inflation. How much inflation is good, how much inflation is bad? What do you think? How much inflation is good, how much inflation is bad? Give me a number, any number. Percentage terms में. So what is inflation? उसके पहले inflation is nothing but increase in prices. So today something is costing 10 rupees, tomorrow if it is costing 12 rupees, which means 20% inflation हो गया है. 2 rupees upon 10 rupees, 20. I am not going into inflation chapter now because उसमें we'll detail में do everything about inflation. But for now we are under monetary policy heading. So we are doing inflation targeting. अच्छा, one very common interview question, and not only in UPSC, in various RBI, SEBI, NABARD, various other regulatory exams also, which I saw from the various transcripts and my friends also, that if inflation, पहली बात तो inflation is good or bad, it is bad because it hurts you. So if inflation is bad, why don't we target 0% inflation? That is a question. We can make inflation 0%. We will keep our prices same. But remember to think from supplier side also. If prices don't increase, do you think supplier will be willing to supply? He will not. Imagine working on same salary for 5 years. You will also quit. Similarly, inflation has to be there. Now, how much inflation has to be there? That is the question. It should not be that high that customers feel or consumers feel a lot of burden. It should be not that low that suppliers don't get incentivized to increase production. See, remember, inflation is price rise. So today if something is costing 10 rupees, tomorrow it will cost 12 rupees. You are hurt because you used to pay 10 rupees, now it is 12 rupees. You say महंगा हो गया. You say महंगाई है. But think from supplier side. Think that you are now selling that thing. You used to get 10 rupees, today you are getting 12 rupees. You will be very happy. Yes or no? Yes or no? Do you agree? So price rise makes suppliers happy. Price rise makes consumers sad. Price falls makes suppliers sad, and price falls makes consumers happy. If something is available at a discount, you are happy. Yes or no? But supplier is, he is वो दिल पे हाथ रख के he is giving you the discount because he is losing money. So RBI said कि inflation is good for the economy, but it should not be so high that there is burning or overburning of the economy, or economy burns out and collapses, or it should not be so low that supply collapses before increasing only. है ना? You will buy a new building and new office. Why? Because you have a lot of customers. And when you have a lot of customers who are willing to pay higher prices, then only you will invest so much. Chalo. Is this proved beyond a shadow of doubt that inflation is good for the economy? Some of it is good for the economy. Yes or no? Inflation is like taste maker in Maggie. It is good. But if you put 4 packets of taste maker in a Maggie, it is very bad. But if there is no taste maker in Maggie, what do you think? It will taste very bland. Inflation is like taste maker. Some of it, 1 packet has to be there. Now, what is the size of that packet? That you have to think. 1%, 2%, 3%, 4%, 5%, 10%, 15%, 20%, 25%. कितना होना चाहिए? Lot of research was done. We will not get into that. Lot of research was done. Lot of data was set up. Last 10 years, 15, 20, 25, 30 years का data was studied in depth and everything. And then we came up with a target. अभी V मतलब क्या? Now let me rewind something, or let me take you to 2014. Do you know Urjit Patel? Dr. Urjit Patel? He was the former governor of RBI. ठीक है? He was now it is Shaktikant Das. Before him, there was Urjit Patel. Urjit Patel was the deputy governor when Dr. Raghuram Rajan was the governor. So Dr. Raghuram Rajan was brought in 2013 when I was working with RBI. And below him, remember I told you RBI has governor and 4 deputy governors. So his right hand man was Dr. Urjit Patel. He is a brilliant world class economist. So Dr. Raghuram Rajan constituted a committee under Dr. Urjit Patel, which is called as Urjit Patel Committee. I'll give you time to write. Just listen to this story. It is very important. Urjit Patel Committee. ठीक है? Urjit Patel Committee to look into whether we can target inflation, whether RBI as a monetary policy authority can target inflation. Now let me introduce to one dilemma. If inflation grows, what do you think will happen to nominal GDP? Will it be high or low? If inflation increases, nominal GDP will be high. Yes or no? If nominal GDP is high, do you think growth will be high? Because we measure it through nominal GDP. So nominal GDP last year was 250 rupees. Today it is 500 rupees. Oh, double nominal GDP. Growth rate very high. Yes or no? But it is air. उसमें कुछ है नहीं. Real growth नहीं है. But we target nominal, like we measure nominal GDP across countries. ठीक है? So government is very happy with nominal GDP. Yes or no? Because government can show high rate of growth. So government can tell कि in our Sarkar's time, economy grew at 10%, economy grew at 11%, nominal. But we know that, we economists know, now we are expert enough to know that 11% is not real, it might be only 7%, 4%, so inflation hai. Very good, ठीक है, 4% is the inflation. So now, government wants more growth, but RBI wants less inflation. How to resolve this? Government wants more growth, RBI wants less inflation. How to resolve this? Because for more growth, inflation has to be on the higher end. See, government also agrees that inflation high is very bad. So let's say government says that 20% should be the inflation, RBI says 10% should be the inflation. समझ में आ रहा है? Government says 20% say my nominal GDP would increase at my desired rate. RBI says 20% is too high, prices will rise beyond control. 10% is ideal for incentivizing suppliers. Now there is a tussle. Okay? So RBI set up Urjit Patel Committee to make some recommendations how to solve this problem. How do we get out of this? Because government, after all, economy is run by government and RBI together. Okay? How to solve this problem? So then Urjit Patel Committee came up with 4 recommendations. It should be by heart in your mind. 4 recommendations. 1. To target inflation, पहले तो government should do its job. What is government's job? To keep fiscal deficit at a minimum. So he said कि we can target inflation only when fiscal deficit is kept at a minimum. Whatever minimum, 3, 4, 5%. समझा? Because if government is not keeping fiscal deficit at minimum, we cannot target inflation. Why? Because government will borrow huge amounts of money. It will cause crowding out. It will cause higher prices. It will cause inflation. We cannot control unless this is brought under control. Yes or no? Second, he said, कि let us make a committee of government people and RBI people, independent. See, we have seen recommendations to talk about independence. ठीक है? Let us make a committee, ठीक है? Who will government will send some people, RBI will send some people, and we'll discuss on the inflation rate. Mutually we'll discuss, झगड़े करेंगे, मारेंगे, we'll hit each other, but we'll come out with a conclusion. See, one more important thing, before Urjit Patel Committee, all RBI's actions, decisions were taken by governor, because he is the head of RBI. So how much should be the interest rate, how much should be the open market operations? Obviously government was also in talks with him. It is not that he acted on a sole basis, but all the power was in the hands of governor. So this was also one of the reasons, and you know, this is why I like Dr. Raghuram Rajan, because he, being in power, set up a committee to look for solutions to divide this power. He said that too much power in one person is very risky, because if one is, you know, ideology hota hai, one is saying ki no, we should provide more funds. So someone from farmer background, if he comes, so he will provide more and more credit to farmers only. But that might not be useful for the entire economy as such. Okay? So to divide the power of RBI governor, he said he asked Urjit Patel to look into that also. So Urjit Patel said that since we are targeting inflation, since this is our key variable, the decision on how much should be the inflation should be taken by a monetary policy committee. Monetary policy committee, which will be headed by governor. आप तो हो ही, because you are RBI. ठीक है? But monetary policy committee होनी चाहिए. Instead of only governor, there should be a monetary policy committee who would be heading, like the governor should head the monetary policy committee. ठीक है? Third part. So I have not told you yet, but inflation are of various types. There is the wholesale inflation, there is retail inflation. Inflation are of various types. I have not told this to you yet. Okay? So they said, monetary policy, Urjit Patel Committee said that we should target inflation. Which inflation, that I am not disclosing yet. We'll see inflation chapter tabhi I will tell you which inflation are they targeting. Okay? And fourth point, कि whatever inflation you are targeting, whatever flavor of inflation you are targeting, very important, that should be kept as 4 plus minus 2%. Basically 2 to 6% का range. Yes or no? 4 plus minus 2%. 4 plus 2, 4 minus 2. This is the rate which was set. 2017 UPSC exam interviews, almost many candidates were asked why 4 plus minus 2%. Okay, why 4 plus minus 2%? So that was written in some RBI documents. I had read the RBI annual report. Usme they had written ki we did a cross-country analysis of various developing economies. Like us, Brazil is there, Vietnam is there. We are all developing countries. We are all developing economies. And we did all the cross-country analysis, and we found out that this is the ideal range. So there are various factors which they took into consideration, but this is the ideal range. So now, what are the 4 recommendations of Urjit Patel Committee? There should be a monetary policy committee headed by RBI governor. Second, fiscal deficit should be reduced by the government. Third, we should target inflation. Which kind of inflation we don't know yet. I will tell you. But fourth, what is the range of inflation which we should target? 4 plus minus 2%. Now, very important, in 2014, this recommendation or this committee gave its report. Okay? In 2015, government agreed to it, RBI agreed to it. Bear in mind that a governor is by himself dividing his power. Yes or no? 2015, a monetary policy framework was devised. Do you understand framework? Structure. Monetary policy framework agreement was signed. Who do you think signed the agreement? RBI and government both. They said कि साथ में we will discuss the policies. In the monetary policy committee, we will discuss how much inflation is to be kept. See, he gave a recommendation of 4 plus minus 2%, but ultimately who is having the authority to set this? Monetary policy committee. So authority was divested or authority was removed from only governor to monetary policy committee headed by governor. Is this clear? Okay? But authority on what? To set inflation. So RBI's focus was very diverse. Now it focused on inflation. Ki we want to control inflation. Samjha? These are the 4 key recommendations by Urjit Patel Committee. This is one. Secondly, monetary policy framework agreement. When we speak about monetary policy framework agreement, it was signed by RBI and government both. In 2016, monetary policy committee came into picture. Monetary policy committee came into existence. Who heads monetary policy committee? Governor. So monetary policy committee comprises of 6 members. ठीक है? 6 members है. 3 from RBI, 3 from Government of India. Now government sends its own staff also, and government appoints academicians also. So someone who is teaching economics or financial policy in IIM Ahmedabad, let's say, so that person can also be nominated by government to sit on the monetary policy. Now who do you think comes from RBI? One member we already know, governor, plus one of the deputy governors, plus one more member from RBI, and government sends 3 members. These 6 people come together and discuss what should be the inflation target. These six people come together and discuss ki, what should be the policy action taken. So see, for example, they have set a target of 4 plus minus 2%. See, this was the recommendation. We don't know what target they have set. They have set the target of 4 plus minus 2%. Tomorrow, if inflation goes to 7%, then what actions are required? That will be discussed by or decided by monetary policy committee. Now, what if 3-3 vote? What if there is an equality of votes? What do you think? 3 people say yes, we should do this. 3 people say no, we should not do this. Governor has a casting vote. Final vote lies with the governor. Only when there is a tiebreaker vote, or it is called as a casting vote. Tiebreaker vote lies with the governor. So if governor has said yes, let's say, one person from Government of India has also said yes, Deputy Governor says no, he also says no, and Government of India ka another person says yes, 3-3 ho gaya, then Governor will again get a second vote to say ki nahi, I am with yes, so I vote yes. Samjha? Government will get a tiebreaker. Sorry, Governor will get a tiebreaker. Is this understood? Now some things about Monetary Policy Committee. We follow a bi-monthly monetary policy. What do you mean by bi-monthly? Once in 2 months. Our monetary policy is bi-monthly, which means bi-monthly this committee will release its report. We have reviewed the inflation, it is within the target, we are taking XYZ actions. After 2 months, we have reviewed the inflation, it might not go beyond, or it is about to go beyond the target, then we are taking these actions. Similarly, every 2 months, bi-monthly monetary policy is reviewed. Okay? Now, or bi-monthly monetary targets are set. Now, there is another action which is taken by Monetary Policy Committee, which is monetary policy review. So, they review the entire happenings in the economy. They do it every 6 months. Every 6 months, they check ki India mein kya kya ho raha hai, what is happening, Every 2 months so they take actions to control inflation, but every 6 months they give a broad macroeconomic indicator ki where is our economy heading. So that is called as monetary policy review. ठीक है? I'll give you time to write, don't worry. But this is very, very, very important. Monetary policy review every 6 months. ठीक है? At the beginning of every year, they decide how many times to meet. समझा? At the beginning of every financial year, they decide कि when to meet, when not to meet. ठीक है? But they should meet at least 4 times in a year. Meeting at least 4 times per year. Do you think government can send any MP or MLA here? This is a professional body. ठीक है? This is a professional body. IAS officers come here. Indian Economic Service officers come here. RBI is a professional body. So MP, MLA, not allowed. Okay? What do you think is the term of these members? See, governor and deputy governor will be there. They are permanent. They are not going anywhere. What do you think is the term? Unless they give up their office or they complete their term. What do you think is the term for MPC members? It is 4 years. Do you think reappointment is allowed? Reappointment is not allowed. New members should come, fresh thinking should happen, new ways of controlling inflation should evolve. So this is a completely professional body if you see. Okay? Based on the whose recommendations? Which committee? Which committee? Urjit Patel Committee. Okay? Does the governor have 2 votes? Yes. First vote, normal vote. And then if tie happens, then second vote. If tie doesn't happen, then so let's say if 5 people vote for and governor votes ki no, I will not, then no. Governor का कोई सुनेगा नहीं, ठीक है? Do we have a bi-monthly monetary policy? Yes, we have a bi-monthly monetary policy. So every 2 months you will find in newspaper an article about the monetary policy ka whatever they have discussed. Is this clear? Is this very clear? This is the major thing. ठीक है? Now we'll talk about the target. What was the target recommended? 4 plus minus 2%. ठीक है? Let me write this down. Target was 4 plus minus 2%. This was the target. So Monetary Policy Committee, when the agreement was signed, framework agreement was signed, they also said ki, okay, we'll go with the recommendations of Urjit Patel. 4 plus minus 2% will target, which means inflation has to be kept within 2 to 6% by RBI. Yes or no? Samjha? This is 4 plus minus 2%. Now, this is, but for how long this target would be there? There is a possibility that next year you might need to set a higher target. So how frequently is this target revised? So this target, again, like GST compensation says, this target was set for 5 years initially. So this is a medium term target for 5 years. Medium term target for 5 years. Chalo, very good. Now, but you said, sir, that Monetary Policy Committee came into being in 2016, 5 years over in 2021. Monetary Policy Committee has set new target for the, so initially it was 16-17 to 21, year 16-17 to 21. New target of 2021-22. 5 years, kitna hoga? 26-27. New target is now same. We have extended the target by another 5 years. We have not changed the target. So uske upar if you want to read, not relevant from exam, but if you want to read for interest purpose, you can read why it was retained, why not changed. They have given good analysis and good explanations of the factors which they take into consideration while designing monetary policy, all these things. Okay? So now let me tell you what is this exactly. ये क्या है? We will discuss in inflation chapter. But what flavor of inflation? Look at the words. Now you should just only write these. These words won't make any sense, and I will not even explain, because in inflation chapter we are going to go into depth. So there are various flavors of inflation which you can target. So which flavor are they targeting? Headline CPI combined. This is headline CPI combined. ठीक है, or combined headline CPI, whatever you can call it. Now answer very quickly. Which committee? Urjit Patel Committee, set up in 2014. 4 recommendations. Fiscal deficit should be kept to a minimum. Second, Monetary Policy Committee headed by RBI Governor should be the one who is in charge of deciding actions and target. Third, there should be a target of inflation. And fourth, what should be the target? 4 plus minus 2%. Was the target adopted? Yes. Was the target extended? Yes, by another 5 years. Who is in Monetary Policy Committee? 6 members. Can they be reappointed? No. Term 4 years. Can MP, MLA come? No. 3 people from RBI, 3 people from Government of India. Who are the 2 people from RBI which we know? Governor and Deputy Governor. From Government of India, normally 1 academician and 2 IAS officers or something like that are sent. See, remember, no MP, no MLA. So no minister can come under this thing. It is a professional body. What do we know about Monetary Policy Committee? Do we have a bi-monthly monetary policy? Yes, every 2 months. Do we have a semi-annual monetary policy review? Yes, every 6 months we have a monetary policy review. Yes or no? Then what else did we see? Baaju wali screen mein. They meet at least 4 times a year. 6 members we saw. Monetary policy review every 6 months, 4 years reappointment. Okay, done. Then we talked about the target. 4 plus minus 2% medium term target for 5 years. 4 plus minus 2% for further 5 years also. It is a medium term target. Okay, it is a medium term target. Is Monetary Policy Committee or data about Monetary Policy Committee clear? Is it very crystal clear? Because this is very important. Huh? What will happen if RBI does not follow or RBI is unable to control inflation? What will happen? क्या होगा? What will happen if RBI is unable to follow this or RBI is unable to control inflation within this target? If it does not give or if it does not control inflation for 1 quarter, 3 months, it is okay. 2 quarters, it is still fine because RBI might take some time to bring down the rates, bring down the interest rates if it is very high and all. Sorry, bring down the inflation rates if it is very high and all. If the target fails, or sorry, if RBI fails to meet target for 3 quarters continuously, 3 quarters continuously, then क्या होगा? What earthquake will happen? Nothing. It will have to simple give explanation. बस क्या ही कर लेगा और क्या ही हो जाएगा और it will have to give explanation. So RBI can say कि COVID happened. You know, RBI can say कि it was. Remember those 4 escape clause provisions? Agricultural collapse of agriculture, structural changes being made about in the economy. ठीक है, decrease in real output by 3% over 4 quarters. ठीक है, those are not applicable here. This is कि RBI has to give an explanation कि why are you not able to achieve the target of 4 plus minus 2%. ठीक है, बराबर है. Now I am going to talk to you something that you will find it so useful. चलो, if RBI is willing to cut interest rates, what do you think? So this is the target. If RBI is willing to cut interest rates, sorry, target क्या है? 2 to 6%. ठीक है, simple. 2 to 6%. If RBI is willing to cut interest rates, what do you think is the current level of inflation? Is it towards 2% or towards 6%? If RBI is willing to cut interest rates, what do you think is the current level of inflation? Towards 2% or towards 6%? Towards 2%. RBI is willing to cut interest rates, which means RBI is willing to supply more money in the economy, which means inflation is low now, which means RBI can send more money in the economy. When inflation is at a higher end, RBI will not cut rates, RBI will increase rates. Yes or no? समझा? If inflation is near to 2%, RBI is willing to cut interest rates because RBI can say कि ठीक है, थोड़ा inflation हो भी जाता है तो भी क्या हो जाएगा? We are in the limits. If today inflation is 3%, RBI will be willing to cut interest rates. When RBI cuts interest rates, more money supply goes to the economy. When money supply goes to the economy, prices rise, inflation also rises. So if RBI sees today that it is only 2.5, 3%, it is more than willing to cut interest rates, yes or no? When RBI sees that inflation is near 2%, Is it willing to cut interest rates or willing to increase interest rates? If inflation is 2%, is more money supply harmful or more money supply good? More money supply is harmful or more money supply is good? If inflation is only 2%, then more money supply, how is it harmful? It is good. See, you have to keep it between this range, but if it is going near here, you have to increase it to keep it in between or to keep it here. So if you want to increase inflation, what will you do? You will encourage money supply, le lo, spend, increase the prices, increase the inflation. When will you be able to say that? When you cut interest rates or increase interest rates? When you cut interest rates. Remember CRR, repo rate, we have to reduce repo rate so that more money flows to the economy. More money flows to the economy, people purchase more, prices increase, inflation happens, then inflation will move out. So can I say this is 2 and this is 6? Can I say if inflation is in this range, RBI will cut interest rates? No. Can I say if inflation is in this range, RBI will not cut interest rates, in fact RBI will increase interest rates? Confused? What to do when inflation is high? Should you increase money supply or reduce money supply? Reduce money supply. How to reduce money supply? Should you increase interest rate or reduce interest rate? Increase interest rate. So your inflation is already very high. What will you do? You would reduce money supply. What would you do to reduce money supply? You would increase interest rate. Similarly, when you have very low inflation, what would you do? You would reduce money supply or increase money supply? You would increase money supply because inflation is already low. When you increase money supply, do you increase interest rate or cut interest rates? You cut interest rates. So when RBI sees that inflation is in this range, when RBI sees that inflation is in the lower end, what will it do? Will it cut interest rates or reduce or increase interest rates? It would cut interest rates because RBI wants inflation to happen. RBI wants money supply to go up. RBI wants prices to go up. But if RBI sees that inflation is already 6.5, what will it do? Would it be willing to cut interest rates? No, it would not be willing to cut interest rates. Why it would not be willing to cut interest rates? Because if it cuts interest rates, this inflation will move further up. Yes or no? Samjha? Is it very clear? This needs a lot of revision. Okay, this needs, and please do not by heart this. This is nothing for by. I will give you a lot of things to by heart when we do economic survey. Lot of things are there to by heart, lot of facts, figures to remember. But now just see the concepts. Okay? So if RBI sees that inflation is in the lower end, what would happen? Would it reduce interest rate or increase interest rate? It would reduce interest rate so that money supply is there, so that inflation then again rises and settles somewhere here. So when will RBI cut interest rate or start cutting interest rates? When inflation reaches here, and it will start start increasing interest rates, so that money supply starts reducing and inflation again comes here. So RBI has to maintain 4 plus minus 2%. See, this plus minus is just a freedom given, but 4 ke aspas you have to keep. Yes or no? So try to understand, when inflation is lower, RBI wants to boost inflation, go up. When RBI wants to boost inflation, it wants to increase money supply. When RBI wants to increase money supply, it will reduce interest rates. If RBI sees inflation is already 8%, it wants to reduce it to within 6%. What will it do? It will pull out liquidity very fast. How will it pull out liquidity? It will increase all the rates. Samjha? ठीक है? Now which rate are we talking about here? Interest rate to hai, but which rate? Repo, reverse repo, LAF, MSF. So many rates are there. CRR, SLR, so many rates are there. So always remember that policy rate, when we talk about policy rate, when we talk about monetary policy rate, when we talk about the rate which is controlled by Monetary Policy Committee to control the inflation, that policy rate is always repo rate. I'll tell you a secret. Repo rate is also various types, which we have not discussed, which is not necessary to be discussed. Okay, isme bhi there are separate 3-4 repo rates. So which of them? No need to know. Repo rate is the policy rate. So when you read in newspaper, Monetary Policy Committee is willing to cut policy rates, what does it mean? It is willing to cut repo rate. Now tell me, if Monetary Policy Committee is willing to cut repo rates, where do you think lies inflation? Lower end or higher end? where do you think inflation is there? Or current inflation, where do you think? Is it at the lower end of the corridor or of the range or higher end of the range? You read in newspaper, Monetary Policy Committee is willing to cut interest rates. If Monetary Policy Committee is willing to cut interest rates, which means it is willing to give more supply of money to the people, which means inflation currently is at the lower end. Because it wants to increase, so it will cut interest rates. Samjha? You can keep on repeating this part of the lecture again and again so that it gets completely feeded in your brain. So today if you read newspaper, suppose, and if you see that Monetary Policy Committee has kept the interest rate unchanged or it kept the policy rate unchanged, which means it is happy with the current policy rates and it is doing something else if the inflation is very high. ठीक है? Are you sure? Shall I move on to the next one, because next one is also very important. ठीक है? Now I want you to tell me the English meaning of the word accommodative. What do you mean by accommodative? What do you mean by accommodative? You are comfortable, you are willing to adjust, you are willing to compromise, right? बोलते हैं ना accommodative. ठीक है? Accommodative, right? Now, when you read Monetary Policy Committee is showing an accommodative position, which means Monetary Policy Committee is flexible. ठीक है? Now, what do you think corporates want? Low interest rate or high interest rate? Corporates. They want a low interest rate. Why? Because they take loans from banks, so they want a low repo rate. They want low loan rate. See, when repo rate reduces, banks' cost will also reduce. MCLR will transfer lower cost to the consumer. Monetary policy transmission. Yes or no? So corporates are always asking Monetary Policy Committee to lower the interest rate. Monetary Policy Committee says, sir, if I lower the interest rate, inflation might happen. Corporates say, sir, don't worry about inflation. There is still space. Okay, there is still space. Matlab, we are at 3%, you can go till 5% also because it is within the range. So they always debate about these things. So corporates want lower interest rates, yes or no? Yes. Now you go to your mother and father to ask for a school picnic or college trip. If I tell you in English, your father was in a very accommodative mood, which means he was willing to let you go, or he was strict and he said no. He was willing to let you go for the trip. He was very accommodative. Similarly, Monetary Policy Committee are the parents of corporates. So when Monetary Policy Committee shows an accommodative stance, it means they are, the key word is willing. The key word is willing. Willing to what? Willing to cut rates. Samjha? Willing to do what? Willing to cut interest rates. Which interest rate? Repo rate. So when you read in newspaper, Monetary Policy Committee showing an accommodative stance or accommodative position, they have not cut rates yet, but they are saying that we are willing to cut in the next monetary policy, or somewhere after 2 months we are willing. So now tell me, when will Monetary Policy Committee have an accommodative stance? When the inflation is rising or when the inflation is reducing? When will the Monetary Policy Committee have an accommodative stance? When the inflation is reducing, because they will be more comfortable with reducing rates. And who is demanding rate reduction? Corporates. Remember, these are monetary policy is the parent here. Okay? So they are accommodative. कि ठीक है, inflation is reducing, we are comfortable now, बच्चे बड़े हो रहे, let them enjoy, right? So you will reduce, or you are willing to reduce interest rates in the next policy. Next. So उसका indication is given before. So this policy, you will take some action. Let's say you reduce interest rates or you did not reduce, but you changed your outlook or you change your stance to accommodative, which means that it is an indication to the corporates that wait for 2 months, we are willing to reduce interest rate. Samjha? What is the opposite end of accommodative? You have a very strict parent. He says no means no. Tight position. Not willing. Yes or no? not willing to cut rates. Samjha? Tight position. Now tight position will be followed by monetary policy committee when the inflation is at a higher end or rising, or when the inflation is at a lower end or reducing. Higher end. बहुत हो गया, you know, 6 के ऊपर जा रहे हैं. I cannot tolerate this. I am very strict now with my children. Who are my children? Corporates. ठीक है? So cost of borrowing will increase, money supply will reduce, inflation will धीरे धीरे cool down because of tight stance. So sometimes we also ask so many things from our parents and parents say enough is enough. बहुत उड़ रहे हो तुम, है ना? कॉलेज जाके समझ रहे हो कि कुछ भी कर लोगे 11th में जाके, ठीक है? And there is something in between which is neither accommodative nor tight, which is neutral stance. So when our parents are reading newspapers, that is when it is neutral stance. That is when you ask anything, they will say ha ha. They will not even pay attention. And when they are seeing news and all, that is neutral stance. When they will actually realize what are you saying, they will go to tight stance. Then when you finally convince, when you tell mom to convince dad, then he becomes accommodative. Yes or no? This is all parenting. Neutral. Neutral is neutral. क्या लिखूं मैं अभी? These three words are your key to understanding newspaper articles on monetary policy. Samjha? Now, what do you think monetary policy would be taking into consideration when deciding to take actions, when deciding to take one stance? It looks at local inflation, it looks at state inflation, it looks at Indian inflation, it looks at global inflation also. Sir, why global inflation? Because we are importing a lot of things. So let's say now oil prices are at an all-time high. If you go to buy normal vegetable oil, your cooking oil also. So I'll tell you an example. Now, I used to purchase 5 liters of oil for 700-800 rupees. And last week or 10 days ago, before coming to Delhi, I purchased oil at 1100 rupees. So oil price is increasing. Is that causing inflation? Yes, it is causing inflation. So do you think global factors would also be taken into consideration? Yes, it will be taken into consideration. Did you understand everything about monetary policy committee in depth? समझा कि नहीं समझा? ठीक है? Very good. So now I want to take you quickly through one of the things so that ये सब नहीं, ये सब बाद में देखेंगे. See this. कहाँ गया monetary policy? This है ना? Press release. See this. June 2 to June 4 latest monetary policy committee happened. उसका minutes पढ़ते हैं. We'll see the minutes. We'll read the minutes. ठीक है? 29th meeting of MPC constituted under Reserve Bank of India Act. So this I might have missed. MPC is constituted under Reserve Bank of India Act. RBI Act के अंदर है. The meeting was attended by all the members. Who are the members? See who are the members. Dr. Shashank Bhide, Senior Advisor, National Council of Applied Economic Research, Delhi. Dr. Ashima Goyal, Professor, Indira Gandhi Institute of Development Research, Mumbai. Professor Jayant Verma. See all are professors here. Professor IIM, Ahmedabad. Dr. Mridul Sagar, Executive Director, Reserve Bank. ठीक है? Michael Devpatra, Deputy Governor in charge of monetary policy. So one Deputy Governor we know, Michael Devbrata, and Sri Shaktikant Das, Governor. Dr. Shashank Bhide, Dr. Ashima Goyal and Professor Jayant Verma joined the meeting through video conference. ठीक है, वो तो चिंदी, right? See this. ठीक है, this is general. See, I have not read this. See this. Very important. Read this. The Monetary Policy Committee reviewed the surveys conducted by RBI to gauge consumer confidence, household inflation expectations, corporate sector performance, credit conditions, outlook for industrial services, infra sectors, projections of professional forecasters. MPC also reviewed in detail staff's macroeconomic projections, alternative scenarios, and drawing various outlooks. Drawing on the above and after extensive discussion on the stance of monetary policy, stance, accommodative stance, tight stance or neutral stance, MPC adopted the resolution below. What is the resolution? On the basis of assessment, etc. What is the resolution? Keep the policy repo rate under LAF unchanged at 4%. Simple. So what are they showing? Accommodative or neutral stance? They are showing unchanged stance. ठीक है? ये हो गया? See this. MPC also decided to continue with the as long as necessary. Why? You have to boost to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID while ensuring that inflation remains within target going forward. twin goals hai na, you have to ensure growth also, but you have to remain within target. So if currently it is 4%, they are saying we can go to 6% also. So we are having an accommodative stance. Samjha? This is what we are talking about. And these are the considerations. So what are, see this, the decisions are in consonance with the objective of achieving the medium term target of CPI. We know more than this. We know it is headline CPI combined of 4% within a band of plus minus 2% while supporting growth. So not only inflation, growth bhi take care karna hai. But these are opposites. When you go for growth, inflation rises. You want to control inflation without controlling growth. Samjha? Basically, you want to reach closer to potential GDP, if you remember. Above potential GDP, it is inflation. They saw global economy, they saw domestic economy, they saw industrial production, they saw headline inflation, liquidity, they saw the outlook. This was the trajectory of inflation. They saw all these analysis and all. So we don't need to get into that. See this, these were the votes. Voting on the resolution to keep the policy repo rate unchanged at 4%. Yes, 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 yes. सबने unanimous vote लिया. Everyone took a unanimous vote. ठीक है? These were the 6 members. 1, 2, 3, 4, 5, 6. And then these are statements, justifications कि क्या हुआ, कैसे हुआ, क्यों हुआ, कब हुआ, right? All of these things. Did you understand this? Accommodative stance. They are saying that due to mitigate the impact of COVID-19, we have to take an accommodative stance. We have to support growth, which means we are willing to reduce rates. We have not reduced rates in this monetary policy. Remember, it was unchanged, but we are still showing an accommodative stance, which means we will further, we are open for further rate cuts, but to support growth, but also while being in the band of 4 plus minus 2%. Samjha? Very easy, very conceptual, very important to know, right? Live we have read everything. See, I don't read these things before and then come. But I am sure that whatever newspaper will throw an article at us, whatever RBI website, government website will throw, we will be able to decode it. Jitna humne cover kiya. If we have not covered it, then obviously we don't know it, right? So I will give you 5 minutes to write it down very quickly and then we will stop here. We will finish monetary policy within 15 minutes of the next lecture, and after that we will start with either inflation or banking depending on my mood. So mera mood jo hoga uske upar we will start. But both of them, see, I hope this you have written. I gave you time to write this. Anyways, I will be sending you this, so don't worry about it. Write the 3 committee names: Jahangir Aziz, Dr. Raghuram Rajan, B.N. Sri Krishna. Write about all these things, the Indian Financial Code and all of these. But did you appreciate the monetary policy, how it works? Accommodative stance. Every word that we have read was used by them in the minutes. मैं उससे नहीं prepare करके आया था. Don't worry, I did not read it beforehand. I have read many minutes. I have read at least 10, 12 minutes I have read. 2 months, every 2 months they meet and every 2 months they give minutes. So who, you know what, RBI interview, I was, my friend gave RBI interview, I think last year, 2019 exam mein. He was asked ki what was the recent monetary committee decision taken. So he said ki rate was reduced or rate was increased, whatever. You know what they asked? Ki was it a unanimous vote or who voted against? So they wanted to check whether you have read minutes or not. Minutes mein tha na wo chart, yes, 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 no. So they wanted to check whether you have read that or not. And obviously you are applying for RBI, you are expected to know it. I mean, RBI mein if you don't know it and you are applying, UPSC might not ask you that, but RBI mein to you have to know that, right? What do you think will happen if, what do you think would RBI do if it wants to increase inflation in the economy? Would it have an accommodative stance, neutral stance or tight stance? It will have an accommodative stance because it is willing to cut rates because inflation it wants to increase. See, remember, inflation up to a level is good. So if it is going below a level, RBI would obviously pull it up. Hai na? Write this down. What leads to an underdeveloped corporate bond market? Forcing purchase of government securities by banks by government, when government forces it, leads to underdeveloped corporate bond market. Open market operations, RBI buys cheap money, RBI sells dear money policy, right? Then you have quantity of securities does not change in open market operations, but ownership definitely changes. Ownership changes from public to RBI or RBI to public, vice versa. Okay? So we'll move to the next screen. If you have not written, then you can pause this video and you can see this. I'll give, इस पे तो कुछ भी नहीं है. हाँ, this you have to write. Qualitative tools of credit control. Just write qualitative because अभी तक के everything which we saw was quantitative. Now you have to write qualitative. So first is your margin requirements, fixing margin requirements. Banking chapter में तो you will say कि sir बस करो मार ही डालोगे अभी. So advanced I will take you in banking chapter. And all concepts, nothing is there to rote learn here. Sadly, rote learning is very easy. There's a lot of rote learning in agriculture, don't worry. कौन सा crop कहाँ grow होता है, it is all rote learning. Fixing margin requirement. Second is priority sector lending. There are 8 priority sectors. Agriculture is the highest, has the highest share. Total 8 sectors का मिला के around 40% is to be given. Around 40% I say because it is different for different kinds of banks, foreign banks, Indian banks. But use the fancy term net bank credit. Average net bank credit, fancy term. And third wala dhamki is always there, moral suasion. ठीक है? I'll change the screen. Inflation targeting, very, very, very important. Urjit Patel Committee recommendations. So once you have read Monetary Policy Committee minutes, you don't have to do anything else because you know all the functions. (2014) Urjit Patel Committee. First recommendation, fiscal deficit should be kept at a minimum. See, always be in the habit of writing notes like this. I used to write in full sentences before my UPSC preparation. But now I have moved on to this, arrows and all. Brackets, arrows and all. It helps save space, it helps save time. And you can revise it quicker. But you should not, itna bhi short mat karna ki you don't understand anything. Suddenly you will feel like in 20 odd lectures we know so much now. Fiscal policy, monetary policy, we have gone into the depth of economics. That is why I don't waste time on boring chapters which you can read by yourself and understand by yourself. वो planning क्या ही chapter है. What did we do in 1950? What did we do in 1960? What did we do in 1970? वो सब है. वो तू पढ़ के समझ जाएगा. You will understand after reading. But this is something which is difficult to comprehend. Monetary policy headed by governor, target inflation, headline CPI combined. What is headline CPI combined? We will be seeing it in inflation chapter and not this chapter. And then 4 plus minus 2% is the target. ठीक है? Next. You don't need to write about monetary policy framework agreement, just write about monetary policy committee. That it has 6 members, 3 from government, 3 from RBI. RBI में 2 members we know definitively, are governor and deputy governor in charge of monetary policy. So deputy governors are also given roles. So the one who is in charge of monetary policy, he will be attending the monetary policy committee. They will meet once in 2 months. The policy will come once in 2 months. They can meet at least 4 times. They have to meet at least 4 times a year. And every 6 months they have to give an entire review of the economy. So monetary policy review every 6 months. They are appointed for a period of 4 years. They are not eligible for reappointment, and MPs, MLA cannot be appointed. Right? This is the 22nd lecture. Okay. So 22nd lecture into what? 2 hours per lecture. So 44 lectures. So in 44 hours, and उसमें भी first 3 lectures or question paper analysis. So if you reduce that, around 37, 38 lectures or 35 hours, we are able to read monetary policy committee minutes, which is an achievement. Yes or no? In 35 hours. ये तो you can write it in your own way. This is just for explanation. So 4 plus minus 2% is the current target also. इतना भी लिख दिया तो भी ठीक है. But always remember it is a medium term target. This is important. Medium term target. Policy rate is repo rate. This is also very important. And of course, whatever I have written in blue is important. If it fails to meet target for 3 quarters, then give explanation. Then we have 3 stances: simple, self-explanatory, accommodative stance, neutral stance, and tight stance. Not willing to cut rates, willing to cut rates, and neutral. Who is demanding rate cutting? Corporates. Borrowers are demanding to. See, you also demand now from monetary policy committee, sir, please reduce home loan interest rate. Repo rate reduces, MCLR से monetary policy transmission happens, you get home loan at a lower rate. Simple. So you are also demanding rate cut, but monetary policy committee is saying कि sir inflation हो रहा है. ठीक है? We'll stop here. If you left out, if something is remaining for you to write, you can just rewind it and pause it there, and you can write. Anyways, I'll be sending this through. So I hope you understood or you comprehended monetary policy in its entirety. We started monetary policy by saying that RBI controls interest rates. Then we saw that the interest rate is actually not controlled by RBI but monetary policy committee. We saw the debt managing function of RBI. We saw we saw about issuing coins and currency. Then we saw so many things about different kinds of windows available. Then we saw about WMA, ways and means advances, which is available. We also saw that state government has only long-term sources of finance, which is HDL, but central government has both short-term T-bill and long-term government bonds. We saw entirely each and everything in detail about monetary policy committee. We also saw quantitative and qualitative tools of credit control, not credit creation, credit control. Qualitative are what? Margin requirements, then PSL, priority sector lending, moral suasion, direct action. We also saw about open market operations. It buys directly from the public. You can be a big person also, you can be a small person. So RBI buying securities or government securities from, let's say, a big organization like LIC, that is also public only for RBI. Public is public and it can borrow from a small person also. So what normally RBI does is RBI gives newspaper advertisements. Key people who are willing to sell government bonds and can approach RBI or can do the transaction. But the problem is that normally it is in thousands of crores of rupees. So we are normally not unable to participate in that. But yes, if you have that much, or let's say if it asks even 50 lakh rupees, and if you have 50 lakh rupees worth of government bonds, you can sell it to the Reserve Bank of India. We saw dilemmas of RBI as a debt manager of government. कि क्या होता है. Then we saw something about setting up of Public Debt Management Agency by Jahangir Aziz, FSLRC, headed by Sri Krishna, B.N. Sri Krishna and Raghuram Rajan Committee. ठीक है. There is still, मेरा मन नहीं भरा है. There is still some topping remaining, some 5% of the chapter remaining, which I would discuss with you in the next lecture, and I would also discuss with you some very important concepts of liquidity trap and etc. in the next lecture. ठीक है, and we'll again go to fiscal policy for a while. So I hope you enjoyed this lecture. I hope you understood this. Please keep on revising. That is my earnest appeal to you. Otherwise, thank you so much. I'll meet you. I'll see you in the next lecture. Okay.